Hi. Let's learn about Bernie Madoff and how his Ponzi scheme worked. Bernie Madoff was born in Brooklyn, New York, on April 29, 1938, to Ralph and Sylvia Madoff. His father worked as a plumber before entering the financial industry with his wife. Bernie earned a bachelor's degree in political science from Hofstra University in 1960 and briefly attended law school at Brooklyn Law School. While in college, Bernie married his high school sweetheart, Ruth, with whom he later founded Bernard L. Madoff Investment Securities LLC in 1960. Madoff was a pioneer in electronic trading and eventually became the chair of the Nasdaq in the 1990s. He and his brother Peter built electronic trading capabilities that attracted massive order flow and boosted the business by providing insights into market activity. At some point, Madoff attracted investors by claiming to generate large, steady returns through an investing strategy called split-strike conversion, a legitimate trading strategy. However, he deposited client funds into a single bank account to pay existing clients who wanted to cash out. He funded redemptions by attracting new investors and their capital but was unable to maintain the fraud, and the market turned sharply lower in late 2008. Madoff's Ponzi scheme involved several prominent individuals who profited from his fraudulent activities, including Carl Shapiro, Jeffrey Pickauer, Stanley Chase, and Norm Levy. Madoff suggested that these individuals must have suspected the high returns he produced, or at least should have. Madoff's scheme involved persuading clients to invest with the promise of high returns, which he achieved by simply depositing their funds in a bank account and paying out returns from new investors' capital. He also cultivated an image of exclusivity and generosity, wooing investors through his charitable work, all the while defrauding them of their money. The SEC had been investigating Madoff and his securities firm off and on since 1992, with financial analyst Harry Markopolos being one of the earliest whistleblowers. Despite several complaints and red flags, the SEC failed to take action, which ultimately resulted in a delayed response to Madoff's fraudulent activities. In November 2008, Madoff's Ponzi scheme collapsed, and he confessed to his wrongdoing to his sons, who turned him over to the authorities. As a result, he was sentenced to 150 years in prison and forced to forfeit $170 billion in assets. Madoff died in prison at the age of 82 in April 2021. After Madoff's conviction, thousands of investors lost their life savings. Irving Picard, a New York lawyer, has recovered and paid more than $3.7 billion to close to 40,000 victims as of September 2021. However, several victims have endured significant financial losses as a result of Madoff's fraudulent activities. Bernie Madoff has been portrayed as a villain in various media and pop culture representations due to his role in orchestrating one of the largest financial frauds in history. Several documentaries, books, and films have depicted Madoff and his fraudulent activities. Here are 5 key takeaways. 1. Bernie Madoff was a money manager responsible for one of the largest financial frauds in modern-day history. 2. Bernie Madoff's Ponzi scheme, which likely ran for decades, defrauded thousands of investors out of tens of billions of dollars. 3. Investors put their trust in Madoff because he created a front of respectability, his returns were high but not outlandish, and he claimed to use a legitimate strategy. 4. In 2009, Madoff was sentenced to 150 years in prison and forced to forfeit $170 billion as restitution. 5. As of September 2021, the Madoff Victims Fund distributed its 7th distribution of more than $568 million. Hope this would help. Thanks for watching.